I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on Blockchain Interviews we have Dusan Kovacic, the Chief Investment Officer of the Rockaway Blockchain Fund, also known as RBF. Dusan, welcome to the show, and thank you for taking the time.
Hi, Ashton. Thanks for having me.
You're very welcome. I'm eager to learn about your investment thesis, where you're seeing the growing trends in blockchain moving into this next cycle, and I'm guessing your team's looking long-term into even farther beyond that. So I'm eager to hear your insights on that, and I would love to just kick it off with sort of an overview of RBF and what you guys have been investing in and where you see the market going, and then we'll dive into all the details.
Okay, perfect. So let me start with a short intro. My name is Dusan Kovacic. I'm the Chief Investment Officer in the RBF. We are a venture fund. We started investing into 2017. Today we manage roughly 500 million of assets. We are C to Series B investor. These days we prefer leading deals. We invest like 500K to 5 million check sizes into verticals that belong to our investment thesis. Right now, our core focus is infrastructure, because we still believe for the blockchain infrastructure to be able to serve 1 billion users, like a lot has to improve. And the second is consumer, especially gaming, which we see like the next wave of adoption of users will come from this segment, and because people are looking for like real life experiences which has to serve this consumer market. So this is our main business we see. In addition to that, RBF also has a yield fund that we are offering pretty much a bootstrap liquidity for DeFi protocols that we invest in or we want to support. It's pretty much a standalone fund. Today it manages roughly 50 million, and we generate deals for our investors with market neutral strategies. When there are no DeFi opportunities available, we also do CeFi. Today, most of the yield is coming actually from CeFi. It's a large part of our strategies today is pretty much lending to market makers in a diversified way. And the third part of what RBF stands for is engineering. We have always been tech guys. Victor, who is the CEO and the managing partner, and me have a technical background. Victor founded a technology company, Innovatrix. I have been software engineer. I have a software engineering background. I have been building mining farms, for example, for Monero or Ethereum back in 2016-17. I was also working as a software developer back in the days, developing software to protect companies from data leaks, which are coming from like employees in some kind of like fashion where they were addressing their own interests rather than the company's interests. So we have been always the guys, and we like to also approach the market in very, I would say, data-driven way. And historically, there has been a lot of noise in crypto, and that's why we actually utilize our technical background first in like understanding the data themselves. We started to run nodes to extract the data ourselves. For example, we are investors in Solana, but we didn't know what the traction of Solana was back in like 2017-18. So we started to explore that, and we started to pretty much build our own infrastructure. And we expanded into staking. So right now we are running roughly 20 nodes. We have our own physical hardware. We contribute to the decentralization. We don't like to support like concentration on the AWS or Google Cloud or anywhere else. So engineering is a large part of our, or staking is large part of our engineering efforts. But in addition to that, we have labs teams, which pretty much builds products on top of platforms that we invested. Our overall thesis for the fund is that we help founders shipping product faster, because like we have the VC fund that can provide the capital. We have the yield fund that can bootstrap the liquidity, and we have the engineering team that can either help the founders with the consulting on the technology, or that can build initial products on the platform that we invested in.
Amazing, Dusan, and I think it's a huge advantage to have that technical background and sort of understand the inner workings of the company rather than just being only on the business side. I think that's important, and to have the yield and the engineering side and be building with the founders. It's more of a strategic investors and helpers rather than just giving your money and hoping that the team, does what they say they do, you're able to actually help them with that. So I think that's a huge advantage there. And you mentioned at the beginning about the infrastructure. I think that that's obviously necessary for mainstream adoption to have the infrastructure, or when these applications get to a level of millions of people using them and they can't scale because the underlying infrastructure isn't ready for that, then you've sort of gone too far without fixing the fundamentals. So obviously infrastructure is important there. I would love to hear more on, you mentioned there Solana and running the nodes, but what other infrastructure plays has RBF been looking at, and where do you think the most important parts of infrastructure need to be continued to be developed to get to mainstream adoption in blockchain?
That's a good question. So we are big believers on the multi-chain world, and we are not a big fans of the EVM or Solidity itself, because it fundamentally doesn't allow development to scale. Especially if you look at, like, for example, like today's software development in Web 2, it's all about like time to market and ease of use of the programming languages. Yeah, so we have JavaScript, you can code easily a front end, or if you want to do the machine learning, for example, you have Python. And only if you want to do like low-level programming, you use languages like C, C++, or Rust. It's cool to develop in C++, and I have been a C++ developer myself in the past. But the problem with that, it takes ages, yeah. And we see that the space is evolving into platforms, into development platforms where you optimize for time to market. In blockchain, though, right now we see the EVM and the Solidity as something that doesn't allow you to scale, at least not in our eyes. I know there is a large part of investors that believe like the EVM is like the JavaScript type of a situation back in Web 2, where a lot of like JavaScript was not ideal. It was slow. It has like security issues. But given it was so popular that it survived anyway and it scaled. But I think JavaScript, the comparison to Solidity, had one really large advantage, and that it was really easy to develop in JavaScript, while in Solidity it really takes ages. So we really look at the execution models and the programming languages that these blockchains support, and are looking for solutions that can really address the the development need quite well in context of like security and time to market. So that's one angle. And of course we are also looking for other part of the of the multi-chain vault infrastructure that includes, for example, bridges. We invested in Axelar. That includes like data or RPC platforms. So we invested in Pocket. There are also oracles as a large part of the infrastructure. We, for example, invested into Switchboard recently. So that's like version one of the blockchains that we see as of today, that the multi-chain world as we understand it today. But what is coming in our view is the evolution brought by the zero-knowledge cryptography. And we really see the evolution to be quite substantial, because in the early days, cryptography today, asymmetric cryptography can only prove like two things. One, that you can encode the message to be only read by the desired reader, or B, you can prove your identity. But what zero knowledge actually allows is to prove any computation. Yeah, so you can design any computation you want, and you can execute it locally, and then you can prove the result together, or you can prove you can have the proof of the result together with the result. And everybody doesn't only have to like replay the computation as they have to do now, but they just validate the result together with the proof, which I would say has quite substantial impact on the scaling of blockchains, because as I said, not every node has to recompute the computation, but just one node computes and everybody else just validates, which I think will really enable blockchains to be used by 1 billion people.
Great point. And going back to the part where you talk about the future being multi-chain, I'm curious on your thoughts on other multi-chain platforms. For example, the Cosmos ecosystem is supposed to be designed with this IBC, inter-blockchain communication protocol, to help the future be multi-chain. So I'm curious on your take on that, and as well, do you see a need for more layer 1 protocols to be popping up, or do you think that is eventually going to become saturated?
I think that the question on layer 1 is quite interesting, so I will start answering that. And that's because like the process on how to launch layer 1 is actually quite figured out. There, like you have the validating companies, you just initially partner with them, they start to run the network, and you start the whole chain first in the testnet and then in the mainnet or production phase. And what we have actually seen, or what the history shows, like launching a new blockchain is much easier than upgrading existing solution. I think it because you have all the historical technical depth and backwards compatibilities that you have to keep, and it makes like any upgrades really difficult. So I think we are still in the phase where there will be a new layer 1s launched, because it's quite easy to learn from the history on what worked in layer 1 scaling and what didn't, and just learn from that and figure out like, okay, this is my solution, and launch a new, comparing to like when you need to upgrade the existing solution. So I believe there is an opportunity for new layer 1s to be launched, and it can be anything. It can be pretty much approaching the scaling from parallelism fashion, like Sui or Aptos are going, or it can be with the modular stack, like the Celestia and then the layer 2s are approaching. So I am happy to invest in this vertical, like moving forward, and it's because like the current problems are or the main challenge is to serve the billion users, and there is no infrastructure to do that right now.
Mm-hmm, definitely. And you mentioned earlier about investing in bridges, and we've seen in the past, even still, there's still a lot of exploits, and it doesn't seem that the bridges are perfect to sort of bridge these different blockchains together. I'm curious on your take on the IBC and sort of Cosmos infrastructure and being able to sort of communicate these blockchains together more efficiently. Do you think that's something that will be more prevalent as these blockchains continue to grow?
I think that's a question that remains to be answered. So the Cosmos model is like we have like app specific chains, which has I think the IBC itself is okay, but it has the challenge with like availability of those chains, because like each of the chains has like its own set of validators, which can hold the consensus on that particular chain. But I think as long as the industry is aware that, or the users are aware that such thing can happen, this can be a valid model to scale. Mm-hmm. On the bridges, though, I think I find the analogy very much in the exchanges, when there were exchanges back in 2016 or 15 or earlier that were hacked, and people were claiming, okay, exchanges can never be secure, like not your keys, not your Bitcoin. Yeah, this meme is always out there on Twitter once in a while, and I think, but if you look at the exchanges today, I mean the hacks are very rare, and even if they occur, the exchange covers it from its own balance sheet. So I think it's all about like maturity of the technology, and the bridges are not there yet, but eventually they will be there. The challenge with bridges, though, is the users lose money and it's painful, but I mean. After a while, when there are best practices figured out, I expect these problems to diminish.
Mm-hmm. Definitely. And in the recent case with the Binance Smart Chain, there was I believe it was an exploit in a bridge as well, because typically there's two blockchains simultaneous using Binance Smart Chain, and there was a exploit in the bridge between them, and then all of a sudden almost 600 million was starting to be minted and siphoned out, and Binance is, sort of went in and sort of freezing things and halted the blockchain, sort of took control for a minute to mitigate all the losses, which is good in a sense, but on the other hand, there's the decentralization maximalists who say that maybe having a centralized entity that can turn off the chain or change things is not the ethos of decentralization in blockchain. What's your take on how that was handled, and do you think that it's it seems there's a little bit of centralization in all of these blockchains.
Yeah.
Nothing's really fully decentralized. So is that the way that it just is, and we should all accept that?
I think I'm very practical. In terms of like having ethos, like everything has to be decentralized. I'm not a big fan of that, because like the more decentralized, the less practical or upgradable. And if you want to be fully decentralized, that means, or like Bitcoin, for example, you are not evolving and you are betting anti-innovation, and you are like keeping the status quo forever, which allows like the competitors to front run you. So I think there has to be a tight balance, and it's pretty much I think it's pretty much an angle of practicality and use cases that you are serving. Yeah. Mm-hmm. I like to compare it, for example, you have a wallet that you have in your pocket, and you have like a treasure where you store gold. You probably don't have all your savings in the wallet, and you don't carry it like every day. And let's call it, okay, these are the app specific chains. And then you have your savings in the bank, and let's call the bank or in a vault, like under the ground, if you have a lot of money, and let's call it Bitcoin. Yeah. So I would assume like I would think about it in a way where really the decentralization level is really related to the use case that you need. And we are actually a big, I would say, a big. One of our concerns in Labs team is actually about decentralization, because it's not only decentralization of stake, it's also decentralization of the stake, like within a data center or within a country or within an ASN block that can have an implication on the availability of the chains. Because, for example, if we see a regulatory attack and there is like 40% of nodes of, for example, like osmosis running in the United States, and the United States providers like shut down the nodes, the consensus, the chain is halted, and the chain is not operating anymore. So we have developed an application for monitoring of decentralization across all these dimensions called Observatory Zone. Check it out. It's observatory.zone. And it's pretty much focuses on the Cosmos zones. Yeah, we have Agoric, Axelar. We have roughly 20 chains.
That's great knowledge. And that sort of makes me think about the recent SEC news as well, where they're trying to claim that the Ethereum transactions are sort of in the U.S. jurisdiction, because 40% of the nodes are in the U.S., or at least that's what they're claiming. With the recent transition, you spoke earlier about how it's a lot easier to make a new blockchain than it is to upgrade an old one, because of the backwards testing and making sure things don't go wrong. And that's why I believe part of the reason that Ethereum took 7 years to upgrade to proof of stake, because it just keeps growing as they're trying to change it. I'm curious on your take on that move to the consensus mechanism. I feel like it definitely adds more centralization, and perhaps makes it more unfair in the consensus of making it easier for people that already have a big stake to earn more. Do you see that as, in terms of the infrastructure play and like growing adoption, does that really matter what the consensus is, if it becomes more centralized or not?
For me, the transition to POS from proof of work is not. I found the risk in the transition itself, but given the risk has not materialized and it went quite smoothly, I don't find the risk to be there. I think Ethereum itself is not about earning. It's about like offering like the trustless platform anybody can run the operation on. I find the risk of 40% of blocks to be produced in United States quite substantial, but there is also this risk with mining as well. I mean, you have the nodes that are operated in certain jurisdictions the same way you have mining hardware in certain jurisdictions. Yeah, so I don't find it like very different in this case. Maybe in the transition to proof of stakes change these jurisdictional dependencies, but they are still there. So for me, this is not something to really worry about. unless there is a regulatory attack from the United States on Ethereum itself, somehow trying to affect, for example, the transactions that are being processed, like pushing on censorship or pushing on the operators to I don't know, to certain actions which are not really wanted.
Yeah, well, we're already seeing a little bit of that. I just saw this morning there was a USDT address that was blacklisted, and we've seen the USDC addresses blacklisted from the US sanction of the Tornado Cash. So it's not too far.
Actually, if I can jump in, this is something we want to understand more in detail. So right now, our observatory project was focused on the Cosmos zone, but we see a lot of like Ethereum proof of stake transition is big topic, not well understood. So we are focusing our efforts to understand and at Ethereum as well, and then we will have more info. But yes, you are correct. This is a challenge.
Okay, and Dusan, I want to jump to another topic for a minute on gaming, because I know your team is also investing in gaming, and it is a huge potential gateway for millions of people to join into Web3. You know, there's a lot of most of the AAA games are not touching NFTs and you know, GameFi yet, although I'm sure they're looking at it. But when one does, you know, some of these games have millions, tens of millions of players that could easily move into Web3. What trends are you and your team looking at in ways that RBF is trying to break into the gaming and GameFi industry?
Yeah, I'm looking for amazing founders that have been proven in like Web2 gaming and can bring the execution on how to develop a game into Web3 in combination with like native crypto economy experts. Because I think that the whole challenge is here. Like, I see the way how the Web3 games or gaming studio disrupt. Or I found the analogy or comparison in initially big financial institutions. The banking sector was not able to accommodate DeFi and were really like fighting or really like didn't really consider it as something to care about. And I find this comparison also in gaming now, where the big companies like Blizzard or EA are not really taking it seriously, and the Web3 model open just drastically disrupts their existing business model, so they are not really incentivized to figure it out. So I think this allows the early stage or the startups to really breaking and disrupt the traditional game publishing companies the same way like DeFi is disrupting the traditional financial sector. And I think that is I think the game is on, and I especially think that if you look at the history, or if you look at the gaming market right now, I believe graphics is not actually driving the innovation in gaming anymore. It was in the past, like when it was like cases of like Half-Life or Doom, but right now it's all about like creator economy. If you look at the most played games, like for example Roblox, that has like 50 million daily active users, it's all about like the part of the user base creating experiences for the other part of user base, and Roblox is actually taking a cut. But if you look at the cut, they take 70% of the creator fee, which is quite dramatic, and the creator itself becomes a victim to the platform themselves. So you have a platform lock-in, you are really dependent, they can change, they can ban you, they can change the terms and conditions regardless of your needs, which is why I believe that they are open for disruption. Because I mean, as everybody knows, like blockchain democratizes access to digital assets, which also means it democratizes access to assets that are in games. So now the challenge is like, how does the new business model look like? So it can be either so it will not be the traditional business model like as we see now, like for example from selling like skins or like really gating the user and giving him like items based on whatever you program yourself, but it will be either from secondary market royalties. This has its pros and cons, because like they can be bypassed. Everybody knows that. It can be from the primary offering of like new items, but also this has to be like really producing new content every day, or it can be something else, like for example the Harberger tax everybody is talking about, where it's all about like paying rent on the asset that you are using in the game like continuously. But I would say these models have not been figured out how to scale the economy moving forwards. But I think it has been already proven that it will that there will be a model that works, because for example, even though like everybody cared about Axie at some point, and it was very interesting, and it really like globalized like the market, where you saw like like in Philippines people were playing and making money that were paid by the people that were holding the Axies. So we see this model to work, to be working, but the economy aspects themselves have to be figured out.
Yeah.
Axie was cool, but the economics was Ponzi, so it was like doomed to fail. Yeah, even though a lot of people made a lot of money, but that applies like a lot of people lost money. But it just gives us the taste of the opportunity that is out there.
Definitely, and I like your approach, what you said at the beginning of this part on gaming, where you're looking for founders that have had success in Web2 games, and they're not so focused on the token economy inside a game that the game itself isn't really focused on, and I think a lot of people got into Axie Infinity because they heard that they could make a lot of money, and it sort of was unsustainable because it went all the way up and then it went all the way down, and people, if they weren't making money, people weren't interested in playing the game, right? And I think you have to go back to the roots of gaming, and that people want to play the game because it's fun and they enjoy it, and the token part of it is an added value, but it's not the entire thing, or it won't be sustainable. So
exactly.
I
think that the fun factor is the key factor to consider here. So that's why I like the experienced, proven teams that know actually how to develop the entertainment factor. But I think also the concept of like crypto economy expertise is quite important, because you need those two to coexist together. Otherwise, the economy will not scale. And as you are a founder, you will probably not figure it out on the first time, because like there is the concept on how to make the company or the project successful from the economic standpoint are not known yet. So there is a lot of pivoting needed, and you need to be really good at, I would say, it, and you need to become an expert in pivoting and looking for this economy model that is the right combination that will lead to success. So I think you need these two aspects in a gaming company early stage that has a good chances to succeed. And I also think because you will need a lot of pivoting initially, you will not be investing a lot of like upfront into graphics. So I find particularly interesting to think about it in a way where it's all about like search for the fun, or for the fun aspect in context of these open economies. And I find it very low probability that it will have like a AAA graphics, because there will be no time to invest and rework the graphics all the time. So it's very likely that the successful games initially, as we actually saw in the Axie case, would not be really like heavy graphically developed.
Yeah, it's interesting to see, the current games and the graphics that they have compared to some of the games you see on PlayStation 5 and, these traditional consoles. It's all about, it pretty much looks lifelike at this point in these traditional games. And I'm seeing quite a few blockchain games that are coming out. They're not trying to rush to the market, but they're putting a lot of value into the graphics. And I think eventually that part will catch up as well. And who knows if Decentraland, as their sort of low quality graphics, will be the go-to metaverse, or will be sitting in lifelike metaverses in the coming years. But it's definitely a huge opportunity. I like your analogy that you made in the DeFi, where it's like at first the banks didn't know how to handle DeFi, and now they're sort of jumping into it. And I think that's happening in GameFi as well. So I'm really looking forward to seeing how that all grows out.
And if I could add to the metaverse, I actually find like the metaverse is like the holy grail of internet economy. Like you have this environment where like everybody finds their own business model to contribute or to extract value. But I think this is still like a lot of years out. I would say 5 to 10 years, because even the very niche economies where you have like very limited audience are not really working in a production setting yet. So I think the steps in the success would be, okay, first we will see like a niche, I would say in-game economies that will work in this Web3 format of openness, and eventually I would call metaverse like a niche economies generalized. Yeah, so there is like a lot of small economies that combine into like one big economy that we call metaverse, and we will have a AAA UX on top of that. So I think like first there has to be this niche economies, and then there can be a time to talk about metaverse. I think talking about like metaverse straight from the start is like building a generalized AI. I mean, the generalized AI is not really working, or we are not there yet because it's not good for anything. Yeah, so you are building like very specialized AI, like for the image generation or solving some other problems. So I find this analogy also quite interesting. Like you just need to have like very specific go-to market with very specific use cases, and then if this works, you can like generalize it.
Great insights, and we don't have a lot of time left, Dusan, but I really appreciate your insights into the infrastructure and in gaming, both very exciting parts that I think will have a lot of growth in the coming years. For the viewers that want to learn more about these topics or just about RBF, is there a place where they can go to learn more and get involved?
Yeah, feel free to visit our page, rbf.capital, or my Twitter account. It's rampage4551. That's the number of the CryptoPunk. And also feel free to check out the observatory.zone, which is our platform for analyzing decentralization mechanics across the Cosmos zones, and hopefully future also Ethereum.
Incredible. Thank you so much, Dusan. I will leave those links in the description box below as well. All the best with everything in the fund moving forward, and let's follow up in the near future.
Thank you, Ashton. Thank you.